All right, everyone. So we've been getting a lot of new data from the housing market, and from what it looks like, we are in another massive real estate bubble, which looks very similar to what happened in 2008. So what I'm going to do is take you through this new economic data that's come out and talk about why it indicates that we're in a real estate bubble, and then I'm going to show you how you can actually take advantage of this and potentially profit from the real estate bubble popping. So the first data we have here is United States new home sales. So this is the number of new homes that was sold each month, and we had a huge jump in the month of July. Sales of single family homes soared 13.9% in July of 2020, which easily beat the expectations. So even though they were expecting a slight rebound, we completely blew past those estimates. And if you look at the graph, talk about a V-shaped recovery, this was even better than a V-shaped recovery because now the new home sales is even higher than it was before the pandemic. So you may be thinking, well, houses are being sold, isn't this a good thing? This is a sign of a healthy real estate market. How does this mean we're in a bubble? Well, if you take a look at the longer term chart and how this compares to history, you start to see the danger we're in. Where if you take a look at where we are now compared to history, this is the highest we've ever been besides 2008. And of course, 2008 was the huge bubble that we had in real estate. So right now, new housing sales are just about the level that we were at in 2005, 2006. And so that was when the bubble was really forming 10 years ago. It wasn't in 2008 was when it popped, but it was actually being formed in 2005, 2006, 2007. So I think that's where we are now, where we saw a huge spike in new home sales. That definitely isn't a healthy sign for the real estate market. So why is this happening? Why are there so many new home sales? Probably the most obvious answer is mortgage rates are now the lowest they've ever been. So you can get a mortgage for like 2.5%. So everyone's taking that opportunity and running out and buying a house. And of course, this is what's bidding prices higher. There's other data that shows that home prices are now the highest they've ever been, besides the 2008 bubble. And now when you have the Fed come out and say that we want inflation to be at least 2.5%, that means you can now get a mortgage where you're paying interest lower than the rate of inflation. So for a lot of people, it's a no-brainer. Why wouldn't you buy a house at these low rates? And so you can watch some of my other videos where I'm talking about why these low rates can't last forever, and eventually when the interest rates do start to creep up, that's when we're going to see the bubble pop. And why else is this happening? Why else has there been a surge in new home sales over the past few months? Another reason is because there's been a lot of movement out of big cities into more rural areas, where now a lot of people are working from home and there's not the usual demand for living in a big city as you would have had otherwise. So now that people can work from home, they're no longer tied to any location. They're able to spread out and move farther away from their work. And a lot of people want to do this, and it makes sense because moving out of a city means the houses will be cheaper and the cost of living will be slightly lower. So that is what we've been seeing over the past few months. And so even though that's helping drive these new home sales now, I don't expect that to last forever. Yeah, for the next few months, we might still see this surge in new home sales as people continue to move out of cities, but after everyone that's going to move has already moved, that source of new home sales is eventually going to fizz out. So now we have some data from the Mortgage Bankers Association, and they saw mortgage delinquencies spike in the second quarter of 2020. So now the delinquency rate is 8.22% for all loans, and that is a pretty bad number. And so the reason this isn't being felt yet is because a lot of states still have a moratorium on foreclosures. So even if defaults and delinquencies spike, most places can't do anything about it because they're not allowed to foreclose on a home. So that's sort of what we're waiting on. If you want a visual look at this, here's a chart where delinquencies just go off the chart. And this is for 30-day delinquencies, a lot worse than they were even at the peak of the 2008-2009 housing bubble. And like I just said, these are only 30 days and a lot of states still have a moratorium on foreclosures. So once those moratoriums expire through this year and early into next year, we should see these defaults start to turn into foreclosures. And another big cause of this is the lack of new stimulus, which again, that first round of stimulus that came out did allow a lot of people to be able to put off defaulting on their mortgages. But now that there hasn't been any for a number of months and it's not really clear if there will be one in the near future, this could be a sign of even greater trouble where we could see these default numbers spike up even more and increase what's already a historic default rate. So that's where we are right now. Simultaneously, we have a spike in new home sales, but we also have a spike in delinquencies and defaults. So I don't know about you, but to me, that's not a very good sign of a healthy real estate market. And I am expecting by next year, 2021 into 2022, we're gonna see a lot of damage in the real estate market. So now how can you actually take advantage of this? If we do see a spike in default and these defaults actually go through all the way to getting foreclosed on, how can I take advantage of this? And this is not financial advice, but this is personally what I'm doing to take advantage of this opportunity I see here. The company Altisource Portfolio Solutions, their ticker is ASPS. They are a company that provides foreclosure services. So whenever a house gets foreclosed on, the bank passes that to a company like Altisource and they go through the foreclosure process. And in rough economic times when foreclosures do spike up, Altisource historically makes huge money compared to the size of their company. And all you have to do is look at what happened during the last housing crisis. where in 2010 this company was around $10, and by the end of 2013 we were at over $160. So this stock went up over 16 times during the last housing crisis. And so if we did see anything similar to that again, I'm expecting the same thing to happen. So this is a part of my portfolio. Again, right now it's under $10, same as where it was in 2009. I made a flow analysis of this stock, so I'll put a card up to it right now if you want to check that out. And so this is basically my play on a weak housing market. This company's been doing a lot of good things. They've also been buying back a ton of their shares. They only have around half of the shares outstanding as they did back in 2010, 2011. So if we do see foreclosures start to happen again and they do spike up as expected, this stock could really take off. So taking a look at the long-term charts, what really are my expectations for this company? And there's a few things to note. The first thing is that even though the housing crisis was in 2008, 2009, Altisource didn't hit their high until the end of 2013. So that's a good 3 to 4 years between the housing bubble popping and Altisource reaching their peak valuation. And that happens because there's a lag between when someone enters foreclosure and when Altisource ultimately gets paid. There's a whole foreclosure process that has to be gone through to foreclose on a house, and that can take months, even up to a year. And because of that, even if we do see a huge surge in defaults and foreclosures, Altisource stock probably isn't going to shoot up 10 times instantly. I'm in the stock for the medium to long term, so I wouldn't be surprised at all if a year passes and nothing really happens in terms of the share price. So it's definitely not too late to get into a stock like this. You could always wait and see what kind of housing data comes out, and if the data does show that we're seeing a larger number of foreclosures and those borrowers are finally allowed to be foreclosed on, then might be a better time to get into the stock if you're more concerned about if a housing crash will even happen. But I've been getting in over the past couple of months because I want to get in at the peak point of pessimism for any company. And right now, people are pretty pessimistic about Altisource. And once all the data comes out and we know that there's foreclosures and we know that Altisource is about to make a ton of money in the next few years, at that point I think the price will already have gone up a ton and it wouldn't make as sense from a possible return standpoint anymore. So that's it for this video. Let me know what you think about the real estate market right now. Is it healthy, and are these high real estate prices a sign of a good real estate market, or are we in a bubble? Be sure to let me know down in the comments. If you like this video, hit the like button as it helps out my channel a ton. And if you haven't subscribed to my channel already, do it right now, and I hope to see you on the next video.